looks like all the people who were writing those obituaries about retail not long ago, maybe they spoke too soon. Just take a look at PVH, the parent of Calvin Klein and Tommy Hilfiger, long one of our favorites here on Mad Money. Here's an apparel company that does a lot of business with department stores. Yet just today, they reported yet another blowout quarter. PVH delivered a 5-cent earnings beat off a $1.64 basis with higher than expected revenue up 7% year over year. Rising gross margins, that matters, increased by 200 basis points. Even better, the company raised its full year sales and earnings guidance pretty bountifully. The numbers were really strong. It's another powerful quarter. So let's check in with Manny Chirico. He's the chairman and CEO of PVH. Learn more about the quarter and where his company's headed. Mr. Chirico, welcome back to Mad Money.
Nice
Good to see you, Manny. Have a seat.
How are you?
All right. Now, Manny, there was a time when we would start right now and say, well, that was back to school season at the department stores. I care more about the back to school season right now in China or in Europe for you because the numbers here are incredibly powerful overseas.
Well, international business is really driving a lot of our growth.
Right.
We're seeing it throughout Europe, just very strong performance. In Europe, speaking specifically, our comps are up mid to high single digits for both Calvin and Tommy. Our order book for Tommy, spring and fall next year is running up about 10% for Tommy, and in Calvin Klein, it's over 25% growth.
So okay, so how is this happening? I mean, well, first of all, why is Europe so strong? I mean, I think it's coming back, whatever. But also, the channels really work so well there. What is that? Why is that?
Well, look, the department stores channel there continues to be fairly
strong. That's what people keep telling me.
Our own stores and our own direct e-commerce business is very strong. And then some of the pure play e-commerce players like Zalando, where we have very strong presentations there, are always growing. I have to be honest, we're clearly taking market share in Europe.
Right.
And the same thing in China. We're growing, for a business as big as Tommy is in Europe, to be growing in excess of a double-digit rate is phenomenal. And for Calvin to be growing at 25%.
Are your stores destination stores like in Fürstendamm in Berlin now? I mean, are people lined up when it opens?
We don't have lines, but traffic is very strong. We're seeing strong traffic growth. Traffic is up in Tommy Hilfiger in the high single digits.
That's incredible.
The Calvin Klein business, which grew 20% traffic this year, is also seeing some nice growth as well. And then the comps speak for themselves, as I just touched on.
We've been watching Alibaba go up consistently. I know you were earliest, and everybody says it in the industry, by the way, that the one guy who saw this and knew to adopt early was you. Both to Amazon and to Alibaba. The sales there are really coming through in Alibaba.
Sure. Look, I think where we were early is our brands, both Calvin and Tommy, got to China early. And being first movers, we had that advantage. Being known to that consumer in that market plays a big advantage for us. And then being a desired brand, you go where the consumer is. And the consumer is shopping in brick and mortar, but they're also obviously shopping on e-commerce, and we're taking advantage of that.
It's clear from when you go to the Chinese sites that Calvin Klein's on the front page of all these sites.
Yeah, Calvin Klein is really having phenomenal growth there. And it's full price retail. We're not talking about discounted retailer. We're seeing full price selling. Every once in a while, some kind of big promotion that'll be across the Alibaba platform that really drives traffic. But
like really Singles Day was big.
Oh, absolutely. Wow. Exactly, Jim.
Now, can we put this all in perspective? Let's say 5 years ago, what would be the mosaic? We would be probably talking about Macy's and JCPenney, maybe some Kohl's.
Well, look, I want to be clear. Those are key department store
they have still great customers.
And 58% of our sales is still here in North America.
Okay.
The difference, if you were looking at us 5 years ago, is that only 20% of our business would have been overseas. And today it's closer to 45%. And profitability is over 50% overseas. So we have that advantage as a U.S. business with a strong international presence. And that's helping to drive our business. But I have to just take a step back and say is our North America business, both our heritage businesses, you can see the numbers
were extraordinary.
And when you look at our Calvin and Tommy business in North America, we're clearly taking market share. You know, you're hearing a lot of people saying, you know, we're reducing our exposure to some department stores. Well, we're not. We're getting sell-throughs. We're getting full-price selling at our key partners like Macy's. And we're continuing to support them and grow that business.
Then why did Mr. Gannett say that it was a very promotional environment at Macy's?
Because it was. And in the nature of what's going out, And we've been able to be, I think we were called out. We were called out by both Terry before and now Jeff now, the Tommy business, which is exclusive at Macy's, and the Calvin business as being top performers in his portfolio.
Right. Now, how is back to school?
You know, back to school is off to a really strong start. Let's just talk about North America.
Yes,
because there it's even a more impactful season. Here in our own stores, we've seen the trend of business in our retail stores improve pretty significantly in the last 4 weeks.
Weaker dollar? Weaker dollar?
I think weaker dollar, but I just think the consumer is just more present, is spending. So we've seen the Tommy comps, which were flattish second quarter, up mid-single digits.
That's
We saw
the
Calvin business,
big delta.
which were like -2 being to flat. That is a big delta. So we're seeing some acceleration. I think you mentioned Macy's. Macy's talked about they're seeing a good back-to-school start to the season. Kohl's also had positive things to say. So we're big parts of that presentation. And I think we're taking advantage of it.
One last question. You are now in a position where you're generating a lot of cash. This is not like the old days because you bit off a lot and it's really working. Is it best to do another acquisition or do you keep buying back your stock the way you are?
I think it's a combination. Acquisitions happen when they happen. You can't force them. I think what you will see from us is a continuation of us buying back and directly operating more and more of our Calvin Klein and Tommy Hilfiger businesses, using the cash to do that, which has been very accretive. Just look at China, as we took that all back over the years. And now, and secondarily, look, we're going to look for another brand to put into the portfolio, and that'll happen when it makes sense to take advantage of our infrastructure.
In the meantime, there's two giants squaring off against each other, Walmart and Amazon. Impact for you?
I think they're both great customers that we want to grow with. My job is to create demand, and to create demand with our brands, and that the consumer wants our brands, and where they want our brands, we have to have our brands there.
Well, it's sure working. What a great quarter. That's Manny Chirico, Chairman and CEO of PVH. It is coming together again for this stock and this company. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.